everyone, a very warm welcome. This show discusses the most important economic stories of the week gone by. In the next 30 minutes, we will apprise you of the key policy developments and try and get an informed perspective on issues that affect you. You're watching Policy Watch and I'm Athar Khan. Our top story this week is the new telecom policy announced by the government. Is the new policy just old wine in new bottle, or will it achieve the purpose of consolidating an overcrowded Indian market? We will also discuss the upcoming railway budget and the earnings shortfall that the railways is currently under. We'll top it off with a dash of monetary policy and talk about the RBI's decision to increase the bank rate for the first time in almost 9 years. My guest today is Soumyakanti Ghosh, Director Economic and Research Cell of FICCI. Welcome to the show, Soumya. Really nice having you on the show. Before we go into our top story, just a very quick question. The budget is almost upon us. What are the industry expectations from the budget?
I think the industry expectations are very clear. There should be some sort of clear policy statements in the budget so as to take it forward. I think that some of the reforms are long overdue. The oil sector is one of them. Then also the budget wants to see a statement on how the tax base could be widened, the expenditure could be curtailed, and obviously at a fiscal deficit which the market is comfortable enough.
But do you think Pranab Da will be able to deliver on the industry's expectation, or does he have too many compulsions, political and otherwise?
I think he has some, if everything goes all right, and if suppose the election results are favorable, then there could be some leeway for the government. If otherwise, I think he's have to do a very tough balancing act by satisfying the industry expectations and also playing to the market. So hopefully, the second one will take preference.
Right, so a tightrope it is for Pranab Mukherjee. We'll go into our top story right away. India on Wednesday unveiled its new telecom policy. The new regulations aim to simplify licensing rules, encourage mergers and acquisitions, and bring greater transparency to a sector tarnished by graft allegations. This is the third time the government has formulated a policy for the sector after similar moves in 1994 and 1999. The new policy prescribes a single license for the entire country and also separates licenses from bandwidth. The new rules will be effective immediately and the entire policy will be announced in April. The new policy also allows bandwidth sharing within a service area except for third-generation telephony services or 3G. Contentious issues like charging a one-time fee for bandwidth held by telecom companies beyond the prescribed limit will be decided later. Now, Soumya, this new telecom policy was just unveiled by Kapil Sibal, the Union Telecom Minister. Do you think this policy sort of helps larger companies as opposed to the smaller players in the market because it might just consolidate the already very overcrowded Indian market?
See, I think the policy, if I just want to digress a little bit, if you want to look at the policy highlights, some of the highlights are very encouraging. For example, the decision to separate spectrum for the licensing, the unified licensing regime, the establishment of a telecom corporation, and also the exit policy. I think some of the steps which the government is going to do, and of course the broadband policy, right to broadband, just like right to education. I think these are some of the features of the policy which is very encouraging. However, if you look at the Indian markets in terms of the circles, there are around 10 to 14 players in each of the circles. That is far higher than the global average, which is around 5 to 6 players. So going forward, I can see that the consolidation is going to happen in the industry because the global norms and the current practices in the industry will not allow so many players in the market, and maybe this policy may act as an enabler towards achieving that objective. So from that point of view, I think that policy is a welcome statement has been made.
So you agree with the Bharti Airtel, which is the only telecom company that came out with a statement saying it's a very good policy. So you do sort of agree that consolidation will happen. Also, I want to ask you, was that currently companies need separate licenses for the entire country.
Yes.
Now, if this policy, obviously it's effective immediately. Now, they'll have a single license for the entire country. Yes. This could mean for companies that they might have to forego some of the charges like, say, roaming. Now, roaming is about 10% of these revenues that they get. Telcos, especially smaller ones, are not going to like that.
I think, yeah, I mean, some of the points which you were saying are actually true. The smaller operators may not like that. But if you look at the positive side of this policy, The important point is that once you separate the spectrum for the licenses, if you look at the statement very carefully, it talks about separating spectrum for the licenses. It talks about separating, yes, networks of providers and the service providers. These actually are very welcome statements, and that will create, or that will allow the players to save a lot of cost on the capital expenditure. Because once the spectrum goes out of the window, they don't have to worry too much about that. And if that goes out, then of course, there is a consideration of the, revenue consideration. And if I look at the revenue in the last 1 year, there has been an increase in revenue. But this may allow the players to have some bandwidth. And for example, the policy of providing a separate networks and service providers may actually result in entry of the virtual providers in the Indian market. Right. This could be a very welcome policy because after the Supreme Court statement, the 2G ones.
The verdict that
shook
the establishment, so to say.
That actually could be a soothing impact on the industry in the sense that the players, some of the players could actually go and buy it from the other players, the spectrum. And this new spectrum, and coupled with the new spectrum and license separation, this may, if it creates a vibrant secondary market for spectrum, I think that could be a very good policy one. But everything depends on the new spectrum policy, which is likely to be announced maybe.
In April,
yes.
like Kapil said. But it's very interesting you mentioned the 2G verdict. After the verdict, like I just said, it kind of shook everyone around and nobody expected that judgment. Do you think the judgment had an adverse impact on the telecom sector as a whole, maybe in investor sentiment, maybe in market sentiment? Do you agree that that landmark judgment sort of, woke everyone up?
I think if you look at it very carefully, there is both a positive and a negative statement to it. The negative statement obviously is the policy uncertainty which have been created, and that is the government is taking care to by coming out with the new telecom policy.
Yeah.
But if you look at the positive aspect, I was just going to the numbers when I came to the studio today. For the last 6 months, the telecom sector has been the highest recipient of the FDI inflows. And over the cumulative period of the last 10 years, it has been the third largest recipient. So I think even after all the negative news on the 2G, the telecom sector still remains a very attractive bet for the investors. And maybe this judgment by the Supreme Court maybe actually create a lot of transparency in the system, and the government, by way of separating this spectrum licensing, making the compulsory renewal of licensing spectrum after every 5 years, if you look all this in totality, maybe this actually could be a welcome break for the industry.
Right. So you're saying the landmark judgment of the Supreme Court, obviously it had both the sides, but it did have a positive impact as FDI inflows increased. Yes. Very interesting. Also, this new policy that the telecom minister has just announced supposedly wants to allow quicker mergers and acquisitions to happen. Do you see that happening a lot in the near future? Bigger companies, bigger fish gobbling up smaller players?
I think if I look at the, revenue numbers, for example, if I look at the APR, average revenue per user, and if I look at the constraints, so I said it at the beginning that in India, the number of players in these circles is around 10 to 14, which is higher than the global average. So I see some sort of mergers and acquisitions happening within the industry, but how soon it will happen or how quickly it will happen, how will happen, that actually is still not certain, because that will depend entirely. In 2013, the spectrum, this will come up for renewal. So the spectrum policy has to be announced, I think, by April. So by next 1 or 2 years, we may actually see a clear direction in which the industry will move.
So wait and watch is what you see.
Yes.
Also, let's talk about consumers for a bit. Now, companies, we all know which companies were affected, the Reliance Communications, the Tata Teles of the world, as well as Sistema Shamana and Uninor, obviously. Telenor is obviously asking for a split with Uninor now. But what about the consumers? Because of number portability, do you think we won't be affected, you and me won't be affected as much? Or do you think it's actually going to help consumers because they can just change their numbers and carry on with a different mobile operator?
I think it's a win-win for the consumer. Right now, the portability is actually a little cumbersome process. I think you have to wait for 3 to 4 months before it actually happens. But if the unified licensing regime is actually a reality, which the telecom policy proposes, I think going forward, the consumer is likely to benefit. If I look at all the numbers, starting from 2000 to 2010, and what the policy talks about giving a right to broadband, 600 million broadband users by 2020 at a speed of, I think, at a significantly increased speed. The rural density telecom number should be raised to around 100. spectrum allocation, additional spectrum allocation by 2025, I think around 500 MHz. So all these are positive steps, and I think all these are likely to, I mean, positively outweigh the increase in cost and in capital expenditure which the industry has been facing for the last couple of years.
Right. So I will take a small break right now. We'll return right now. We'll come back with another story and another important story about the railway budget. That's after the break. Don't go anywhere. We'll be right back. Welcome back. You're still with Policy Watch. Now, the railway budget will be presented on the 14th of March, and the railway minister has an enviable task of turning around the world's second largest rail network. Indian Railways, once flush with surplus funds, currently has an earnings shortfall of 7,000 crore rupees. Here's a special report that the Policy Watch team filed. Take a look.
India's rail network is second only to China's and carries 22 million passengers every day over a combined length track of 1,14,000 kilometers. But despite financial sops from the Finance Ministry this year and a sizable budgetary allocation, the backbone of India's domestic connectivity is still in the red. The railways received budgetary support to the tune of 20,000 crores in last year's budget. On February 6, 2012, they got an additional loan of 3,000 crores approved. Despite these measures, the railway pegged their earnings shortfall for the fiscal year at 7,000 crores. A hike in passenger fares would seem the logical solution to shore up finances, but the last fare hike happened only in 2002-03. The analysts believe that the biggest hindrance in expansion and renewal of existing assets is the inability to generate the required revenue in absence of a passenger fare hike. The Trinamool Congress has had two successive railway ministers at the centre, and the party line on hiking passenger fares has shown no signs of a change. With Mamata Banerjee still batting for status quo, even a 25% hike in passenger fares would help the railway generate 12,500 crores in its kitty. The working expenditure, which dictates yearly spending, was 73,000 crores for financial year 10-11, but has now shot up by an additional 6,000 crores. The operating margin, which essentially covers the running expense of railway, is at 100% currently. Working with an operating margin of 100%, the railways have no surplus money to invest in new projects or even upgrade existing ones. Top policymakers, including the Planning Commission as well as the Parliamentary Committee on Railways, agree that a moderate passenger fare hike would help the railways generate the funds required to turn the railways around. Till the 14th of March, however, only this man knows whether or not rail travel in the country will get more expensive. Bureau Report, RSTV.
Soumya, there used to be a time when the railways had a surplus of 300,000 crores. In a little over 5 years, they were an earnings shortfall of 7,000 crores. What really happened?
If you look at the figures, I was just looking to the figures when I came to the studio today. I mean, the figures, some of the figures are really frightening. I was just looking at the receipt expenditure gap for the railways. I mean, a very important observation I looked at is that, for example, I looked at the budgeted 2010-11 figures. Then I looked at the revised 2010-11 figures and the actual the budgeted figures in 2011-12. The last time, if you read...
Just 1 second. Sorry, we'll start again. अच्छा, पानी पिलाओ पहले, आराम से करेंगे, कोई बात नहीं. पानी पिलाओ. Take it easy, take a deep breath. And mic ठीक करो, mic को रसल हो रहा है. अच्छा, टाई से टच हो रहा हो. Relax everyone. पानी पिलाओ पहले. हाँ, स्टोरी के बाद से करेंगे, पहले क्वेश्चन से करेंगे. गर्म पानी पिलाओ ना, सर का गला खराब है.
ठीक है.
You can keep it actually. We can wait for 2 seconds. Get it. आराम से सब कुछ. There's no hurry. ये टाइल्स तो नहीं हल रहे वहाँ पे? एक ऑडियो चेक करवा दो सर प्लीज. प्लीज. हाँ पानी पी लिया. Are you feeling better?
Yeah.
Are you sure? Do you need some hot water? Just say an audio check.
Hello. 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 Hello.
I think you should have some hot water and then we'll start.
Your voice is actually last fortnight.
I know. I can see how you're very. What happened?
I don't know. I'm taking medicines, so voice is stuck for the last.
Take your time. No. You can cough also if you want. Get it out and then we'll start. मेरा की गेस्ट का? Feeling better? Relax. No hurry. Can you just do your yeah and pocket को थोड़ा ठीक कर दीजिए. Thank you. It's fine. You can just sit आराम से. My posture is important because I kind of hunch. You're fine. शुरू करें? क्या करने? आंसर से कि क्वेश्चन से? क्वेश्चन ठीक था वैसे. आंसर से लेते हैं. I'll give him a cue और वो शुरू करेंगे फिर. कि मैं क्वेश्चन से ले लूँ एक? ठीक है, आंसर से ले लेते हैं. आंसर से ले लेते हैं. ठीक. I'll just give you a cue saying what happened, then you can go into your start. Same answer, same question. So Soumya, what really happened there?
I think if you look at the numbers very carefully for the railway finances, I think the numbers are a little bit scary. I was going through the numbers today before I came to the studio, and a very interesting observation, I think, which most of us may miss out, is that if you look at the budgeted numbers for 2010-11 and the revised numbers for 2010-11 and the actual numbers, which is the budgeted numbers for 2011-12, which is presented last year, I can see that in all revised numbers are significantly lower than the actual numbers. And then they have been increased significantly in the 2011-12 budget. And this is true for items like traffic receipts. And the other important thing is that for items like modernization, investment needs, there has been a significant decline in 2010-11 revised figures, only to go up by another significant number in 2011-12. So if I compare the budget numbers of 2010-11 with the budget numbers of 2011-12, which of course will not likely to be met given the current conditions, I can see a little difference as far as the railway modernization, the track renewal, investment needs are concerned. In fact, the proportion of fund allocated to the railway safety fund has been nil for the last 2 years, which is itself a very scary fact.
Do you think that happened because of a transition in who the railway minister was? Because it after Mr. Lalu Prasad Yadav, there came Mamata Banerjee, I think,
Yes.
who took over, and completely different schools of thought and different ways of administration, if I could call it that. Do you think it was because of that, or was it going to happen any case, no matter who was in charge?
I think, there has been some debate about the railway accounting in the past. I think the new railway minister, the last railway minister, Mamata Banerjee, has said that some amount of depreciation was added to the budget figures to show it as a good, rosy picture. Even after discounting all the factors, if I look at the numbers very carefully, I can see that a clear shift of emphasis has been from revenue generation to modes which are actually very difficult to finance. For example, if you look at the revenue...
Would you call them populist measures?
I will call them populist. Some of them are populist. For example, announcement of new trains. You find little amount of fund being allocated for the track repair and all those things. I think that amount has actually declined.
Sorry, what happened? Kaun sa question? Populist wala? Populist measures. Achha, we'll have to start from the last answer, na, because I cut him. So last answer, मेरा question क्या था? हाँ, was it transition? ठीक है, मैं transition लेता हूँ. Second question. But do you think that happened, this happened like you just described, because of a change in the helmsmanship, if I can call it, from Lalu Prasad Yadav to Mamata Banerjee? Do you think that is the main reason, or was it going to happen anyway?
That is one of the reasons, and the way the railway finances have moved in the last 2-3 years, this was going to happen. So basically, you can look at it from 2 points of view. One, the announcement of the populist measures by the current railway minister in start of an announcement of new trains. Without any proper recourse to the finance. If you look at the revenue expenditure gap of the railways today, I was just looking at the report of just now. I think 20,000 crores is the support which they get from the government.
The budget last year.
The budget last year. And this is actually higher than the revenue expenditure gap, basically the surplus, which the railway was supposed to generate this year. And if I look at the surplus, after accounting for the dividend payouts, that even declines significantly to around 5,200 crores.
Right.
So I think from that point of view, you don't have enough revenues. You have not raised the fares for the last 8 years. You have a receipts which is static at 1% of GDP for the last couple of years. You have a freight ratio which is 30% from 90% in 1950-51. You need to correct these distortions before we can actually...
But do you think it's time, because of the dire straits that the railways find themselves in financially, is it time to hike passenger fares? Do you think it is the right time?
I think if you have not rested for the last 8 years, and I think even if I assume, even I am a passenger, if I suppose even I also travel by train, I think that some amount of passenger fare hike is absolutely necessary, because the railways are asking for a budgetary support from the government this time of around 40,000 crores, which is double that what it got this year. I think the government cannot give it, given the current fiscal conditions of the central government. So some amount of budget increase in fares is inevitable, and you cannot go on not increasing the fares for the last 8 years.
Lots for Dinesh Trivedi, the current railways minister, to talk about. We'll take another break right now. Lots more coming up on the other side of the break. Don't go anywhere. Welcome back. You're still with Policy Watch. Now, the Reserve Bank of India has tweaked the bank rate by 350 basis points with immediate effect starting February the 13th. The rate, according to the RBI, has been hiked to realign it with the Marginal Standing Facility, or MSF, as a one-time technical adjustment to link it with the main policy repo rate. The Policy Watch team filed this report. Take a look.
After a gap of almost 9 years, the Reserve Bank has increased the bank rates by 3.50 percentage points, taking it to 9.50% per annum from 6%. The bank rate is the standard rate which the central bank buys or rediscounts bills of exchange or other commercial papers eligible for purchase. From now on, the bank rates will change whenever there is a change in the repo rate. The last time the bank rates was touched was in April 2003, when the RBI pared it by 25 basis points to a 3-decade low of 6%. Being a discount rate, the bank rate should have technically been higher than the repo rate, but hasn't been tinkered with since 2003, mainly because monetary policy action was done via changes in the reserve repo rate and the repo rate. The bank rate also acts as penal rate charged on banks for shortfalls in meeting their reserve requirements, mainly the cash reserve ratio and the statutory liquidity ratio. Currently, the repo rate is 8.50%, reserve repo is 7.50%, and the marginal standing facility or the MSF is at 9.50%. Also known as the refines rate in its earlier form, the bank rate was used, just like the repo rate now, to borrow money from RBI by offering government bonds as collaterals. But given the move, this could well be a forward-looking statement on the RBI's view on interest rates in the medium term. Bureau Report, Rajya Sabha TV.
Soumya, this happened just in the week gone by. Do you think the bank rate, which is untouched for about 9 years, why do you think the RBI just immediately tweaked that? Any special reason do you think for that?
I think if you look at the bank rate, if you look at the monetary policy mechanism, I mean, the bank rate was earlier used as a signaling device. It was replaced by
a medium-term signaling rate.
Yes.
As well, yeah.
It has been replaced by the repo rate, I think starting from the last 2-3 years. So the bank rate actually had lost its operational significance. So by that logic, the bank rate, which is basically the penal rate of interest if the say the banks don't meet the CRR or the SLR requirements,
yes,
is the rate which the bank should pay. So it actually had, I mean, the operational significance it had no. So right now, it was long overdue, and linking it just to the repo rate, I think the RBI had made a clear statement that this is just to align it with the rate, and this should not be taken as a statement of any monetary policy intent.
Right, but do you think there have been some opinions in most business papers I read somewhere on edit pages that is there a case for the bank rate to be the single legitimate legal position that it has as a single policy rate instead of the repo rate? Do you think there's any merit in that argument?
I honestly think that the bank rate was used earlier. Then the RBI actually had moved on to a system of repo rate and the reverse repo rate. The advantage of the repo rate is that it's basically the liquidity adjustment facility on a daily basis. And given the current situation, given the current integration with the global markets, banks need liquidity on a day-to-day basis. So from that perspective, the repo rate may be more forward-looking than a bank rate, and that's why you will see that the bank rate now has been linked to the repo rate.
The RBI is also under pressure to cut to slash CRR as well, also from industry bodies as well. Do you think, how do you think the RBI is going to feel that one? Do you think there's any chance of the Reserve Bank of India anytime soon cutting CRR?
See, I mean, if I don't speak from an industry perspective, purely from a technical perspective, if I look at the numbers, if, for example, in the right now the liquidity, if you look at the daily LAF limits with the RBI, it has been running in more than 1 lakh crore every day. And the other important thing which is happening is that with this, the RBI intervention in the foreign exchange market, in the last 4 months, starting from, I think, around September, October till December.
When January, the rupee was having a very bad
rupee was
run.
having a bad one. Yeah. The RBI has actually sucked out more than 40,000 billion from the 40,000 crores from the banking system.
Right.
And January, it had cut the CRR, which has infused 32,000 crores into the banking system.
Right.
So going only by that logic that the RBI had intervened in the foreign exchange market and to neutralize that one, there is a CRR cut which is due in March 2012 policy.
Right. Soumya, thank you very much. We'll have to end there itself. Lots of key takeaways that we can take from today's discussion with Soumya Ganti Ghosh. The first, of course, is perhaps it's time for a railway passenger fare hike. It hasn't happened since 2002, 2003. Perhaps it's time for them, for the Railway Ministry to actually hike passenger fares to shore up revenues that they seem to be short of right now. Also, on our first story, which we did discuss, the telecom sector unlike some harsh critics of the government, Soumyakanti Ghosh seems to think that this policy has a lot of positives rather than negatives. Good news, obviously, for larger telecom players in the country. Thank you so much for joining us this week. We'll be back next week, same time, same place. Goodbye. Thank you for watching.